Dipan Mehta is now joining us on a phone line. Markets, meanwhile, are at the day's low. We are down 62, 63. In fact, slightly more than that in terms of Nifty. Dipan, what do you make of the markets? We were 100 points up yesterday, and now we are down 73, so almost all the gains given up.
Yeah, that's right, and a bit disappointing because we thought the uncertainty as far as U.S. Fed rate is concerned is over and done with, but the way the U.S. markets and global markets have reacted, today also we have corrected in line with that. But my sense is that, maybe a durable bottom has been created for the time being, and, we may be getting into a bit of a sideways movement, but for the time being at least the worst may be over. Because one major uncertainty is out of the way, and although there may be other challenges globally like slowdown in U.S. and other developed geographies, by and large, I think the action will shift to domestic issues and local variables which impact the market.
Right. Yesterday was the first signs where FIIs came out and really bought, taking the markets higher. Do you think that that trend, if it continues, markets can go back to the 8,200 levels?
That's a bit far-fetched. All we can say is that for the time being, a bottom has got created, and we need to, not pierce that bottom, maybe trade sideways, build on the gains of the last 4 or 5 trading sessions until yesterday, and then take it from there. I think, the basic structure of the market still remains weak. But at least, we have one event out of the way. And more importantly to watch will be the FII flows in the short term and whether they are turning positive, because up to the event of the FOMC meeting, FIIs were continuously selling and domestic investors were buying. And now that that particular event is out of the way and next uncertainty surrounding U.S. interest rate is a quarter away, we need to wait and watch and see how the FIIs are actually, positioning themselves for India. And if their flows are neutral to slightly positive also, then it will bring good tidings to our market.
Right. What do you think of, now going into 2016, as you yourself are pointing out that a lot of uncertainty for global events are now behind. You think focus will get on the domestic issues? What is the budget? What essentially comes on corporate numbers? All of that will come much more into focus versus what it did in 2015?
Yeah, that's what I mentioned, that we had a global event to overcome, which we have done so, and we are still at the same level. Fortunately, the FOMC has not come out with any surprises, negative surprises, and their positioning and their strategy for U.S. markets has been consistent to what they have been saying earlier. So now that is over and done with. Now globally, the next issue we are dealing with is the oil prices, and the more and more they correct over there, the more and more the impression one gets that there is a slowdown globally. But that is going to affect only the Indian export markets, whereas the companies which are consumer-facing and domestic-oriented, for them I think the slowdown in the global market doesn't impact as much. Having said that, there are certain local events which markets will look out for, the passage of the GST bill. And thereafter, I think in January we'll have the earnings season for the third quarter and the run-up to the budget. So the entire attention, in my opinion, will shift away from U.S. interest rates to GST and budget session and December quarterly results season.
Right. As far as names that one can buy into or one can be overweight on. Last when we spoke, you said about private banks which are looking quite good, especially the housing finance companies. Some of them have seen a correction, especially private banks, not so much with housing finance companies. You think that they are now much better buys?
Yeah, absolutely. I think we remain positive on private sector banks, on housing finance companies, on consumer and microfinance companies. That's a big sector with very high weightage in Sensex Nifty, which investors should have as part of their core holding. Having said that, we would like to disclose that we have investments and recommendations. We ourselves have investments, and so do our clients in a whole host of private sector banks. And apart from that, I think the consumer-facing, brand-oriented businesses, which are basically commodity consumers, I think they will continue to do well, and this correction may be a good opportunity to get into those set of companies where you have a brand, could be food, could be item of general consumption, could be building material, Could be anything, footwear, restaurant, anything which has got a consumer-facing, brand-oriented business, locally focused on the Indian market. Those businesses have been doing well and should continue to do well further, because eventually the lower interest rate prices, interest rate and cyclical improvement in the economy will, lead to higher consumer spending and, better sentiment as far as rural as well as urban consumer is concerned, and that will start playing out in the performance of these companies.
Right. How would you essentially, position yourself in such a market? You mentioned about the consumer economy. What do you essentially do? I mean, we are now down 85. We were down. We were up 100 yesterday. FII flows are very, very volatile. You think still one should wait and watch for markets to stabilize, even if it stabilizes slightly higher, and then probably come and put in some money?
I think these are fair levels. You can keep on waiting for eternity, and you may not always get it right. But these are fair levels, and take the usual risk prevention measures, and diversify the holdings. Buy gradually. I think if investor follows these three aspects, I think these are good levels to now start cherry picking and start putting your money to work.
Right. How would you look at some of the global names, because currencies are becoming very volatile globally? Maybe a name like United Phosphorus, a name like Glenmark, any other major pharma company, or something like Tata Motors. You think valuations over there could take a hit, because some of the currencies are really becoming very volatile, like Argentina peso was down about 29% yesterday. Venezuela, there were some concerns earlier of a big revaluation coming in. You think those stocks could take a hit?
Yeah, I think, when it comes to exporters or businesses which derive their revenues from outside of India, you need to be a bit selective. I mean, one cannot, paint them with a broad brush. Seem to be a bit selective over there and see which companies really benefit and which are able to manage the forex risk in a more effective manner, and look for those businesses. But as I said, that the main investment theme has to be domestic-oriented, consumer-facing, brand-oriented, low capital-intensive, commodity consumer businesses. I think there are many such names in our market. These also have corrected by 15, 20, 40% or so. They are mainly in the mid-cap space, and investors should look at gradually acquiring those companies at every correction.
Right. IT for one, how would you look at that? A lot of profit warning coming in. Numbers were not expected to be strong by itself. You think, again, it will continue to underperform?
Yeah, large cap IT will continue to underperform. Mid cap IT will be market performer. That's basically our view. And large cap IT, I think a lot of challenges are there on account of overall slowdown in the global markets, global economy, and base effect coming into play over there. So I don't think they are growing as well as they should. Mid-cap IT, I think, on the other hand, is doing okay. At least they're doing better than large-cap IT. And I think that, because of all the various acquisitions which they have done, or because of their base effect, because of their niche positioning and the opportunity from digitization, these companies will continue to deliver at least at 15 to 25% type of growth rates, which is good enough for an investor.
Right. As far as, consumer-facing companies that you said, apart from that, another domestic link economy would be the infrastructure play. Anything you like over there? Because there is some amount of pickup which we've seen over there when we talk to companies. Or do you believe that, still it is some time before one should go and enter the infrastructure names?
Yeah, I think infrastructure, one can, be neutral to underweight in it. There are certain sectors in which you could be broadly overweight, but by and large, I think infrastructure, capital goods are still not showing the kind of, spring or the kind of growth rates which we are used to seeing. So I would say broadly keep them on hold for the time being.
Right. As far as, the aviation pack is concerned, does that continue to be in a sweet spot? It's generally a sector, Dipan, that we don't talk about, but because it's doing very well, are you looking at that sector, or now essentially the risk reward is not in favor at all?
No, I think it falls bang in our large investment theme, that being brand-oriented, consumer-facing businesses. and aviation does fall in that category, and they are also a commodity consumer, aviation fuel. So I think most aviation companies, all the three listed companies, are attractive at this point of time. And there's good amount of visibility for these companies. Aviation is a growth area. We are seeing the way passenger growth has been improving in the last several months or so. So yes, per se, quite positive on the industry as well.